This is a quick demonstration to illustrate the difference of aggressive and conservative signals. On the left side, we have the high time frame to identify the trend direction, and we use a smaller time frame on the right to nail down the specific entry. So let's look at the higher time frame. For the entry rules, we mentioned that we need to have the fast magenta moving average above the slow aqua one, and then of course we need to have the green candle in order to go long. For the first demonstration here, you notice the fast magenta moving average was still below the aqua, but it was hooking up. Right, it was hooking up, and then we have green candles, and this green candles with the yellow circle broke above both moving averages. So for aggressive traders, as soon as they notice this break up, which is around 44.03, 44.02, if they decide to take it, then they immediately go to the 5 range for the lower time frame to see that we have an up triangle, a green triangle, and we have the momentum down here green, and then the slope is hooking up, and also actually aqua, and then green candle close above the slope as well, so they enter right here. That's for the aggressive traders. If they got in at a good rate, like around here 44.0203, then they do get like almost 10 pips right here, okay? And then if they got in a little late, then they wouldn't be able to get the 10 pips, which is our suggested profit target for the first ticket. I mean for the first for the first contract. And that means if those who are considering aggressive trades, they may need to consider a smaller profit target, and that way they will be in and out like for 6 or 8 pips. And then certainly you can also follow the small trailing dot to adjust your stop loss, and that way it wouldn't be the 6 pips initial stop loss, and you can tighten a little bit. Okay, so that's for the aggressive, this one. But we have to pay really attention to the moving average situation. Like this one here, the fast one was up, and then we have green candle closing above, and then for the aqua slowly up as well. And then when the two moving averages are very flat and close together, not up or down, then we wouldn't consider. It's not even an aggressive entry indicator. So that's for the first one. For the second one, this one is right on the book. Like you have the crossover, and then the fast magenta moving average was above the aqua, and both moving averages hooking up. And then we have a price above the candle close, or they have been like above both moving averages. And then you notice this long buying tail, which is very good. So as soon as you see this, then we will go to the 5 range. Lower time frame is right here, and I have to point out though that this happened at 8:15 today, June 1st, 8:15 in the morning, and we have important news coming out at 8:15. So this, even though is very good for going long, supposedly we will not go long at all because of the news. The important news especially, we do not trade 5 minutes before and after. So even though it's very good, I know very often, well, seems like good signal happened around important news time. So for those who took it, then this one is like a 15 pips runner, and then our 10 pips profit target can be easily reached. But I don't recommend it because it just around the news time, unfortunately. But I think it's a quick demo to illustrate the difference between taking aggressive signals when they're not 100% mature, and then this one is really good, and it just happened around news time. Okay, and then for re-entry, like if we have the indication on the higher time frame that we should be only looking for long, like from here up to there, and then once we have this long exited, and then we see again like everything green, like we have the green momentum back up, and then we have green candle, and then the slope here we're zooming going up, and then also change color from yellow to aqua. Yellow means undecided, and then we have this candle close above the aqua. So for us, like for re-entry, we'll be entered right upon opening of this candle here, so which will be 44.19. And let's see if this one go up. This one went to 30, so meaning for our first target at 10 pips, this one will work as well. It's just like for re-entry signals, we never know. We'll never know how like the strength of the market, whether you still have the energy to go up further. So I'll be very cautious. But for the first one, like this one here, very often we'll be able to get our 10 pips. But for the second one, like after this warning to get out of this and then back again to resume the uptrend, for this example, this signal here, it did have the strength to go up to 10 pips, but we never know. So for taking like re-entry and then re-entry, we have to be very cautious and just like tighten your stop loss ASAP. And then when you notice it doesn't have the strength to go the direction you want it, then you might choose to get out as soon as you see some warning signal right here. And then so we just have to be very cautious to preserve our capital, and then let the trade run, and then those smaller trading dots do help. And then when we see warning like this, then maybe it's time to exit from the last contract. And so that's the way to protect ourselves. And then I hope you enjoyed this demonstration, and I'll see you next time. Thank you. Bye bye.